Hello and welcome back to the channel. Thanks a lot for clicking on this video. I hope everybody is having a fantastic day. Today I want to start with a new series of videos related to the dollar index, the DXY, because there is an old saying that goes like, figure out where the dollar is headed. You won't be surprised where the other asset classes are going. So that's what I'm gonna attempt to do. If you look at the bottom left corner on the screen, you have the bottom price for the DXY, the year 2008, great financial crisis at around 70.8. We had wave 1 up, a 2.5-year correction for wave 2, and then we topped out wave 5 of 1 in, what was it, January 17. From January 17 down to January 21, so 4 years long correction as an ABC for wave 2 in bracket. And from this January 17 up to, from January 21, bottom of wave 2 in bracket, up to September 22, we had a top for wave 1. So notice that this is not a third wave. I do not label it as a third wave because the movement is very rapid, aggressive, and not all the waves can be easily identified on this time frame. So I label it as a wave 1 of a lower degree. That means if the count is correct, and as long as prices do not break down, what was that, 89.167, then we can expect this wave 1 to be the beginning of an impulse, followed by a wave 2 correction in which we are at the moment, to go up much further higher in the future at wave 3 in bracket, target, minimum expected target of 165. I'll spare you the digits from now on. 165. So like I was saying, this is a long-term target provided that the bottom of wave 2 is not broken. And at the moment, prices have declined since September 22, and they are into a correction for wave 2, correction that is expected to unfold as an ABC. This ABC correction would find support for the bottom of the end of the C leg somewhere between 92.5 and 101.1. So you're gonna tell me, but yeah, prices already went into that area of support, so correction is done. Yeah, they went into that area. However, they went into that area without being complete as a correction. They went there during the B and the A phase, and now they are going back into this region as well. So if I change the time frame, I want to take a look at this correction, how it's unfolding, because this might yield some good news for the crypto market. So from the top of September 22 at $114, we had to look for a wave A of an ABC to complete, and we have it in a form of a 5-wave move down, with wave 5 being an ending diagonal, finishing with the under thrust below the trend line of the most recent lows. And then once the A is complete, we would then look for a 3 waves corrective move up for wave B. This is what we had between the top in October 23 down to the bottom in December 23 and most recently in April 24 for wave C of B. Now, if the count is correct, we would then be expecting wave C to unfold in a 5-wave pattern downwards impulse. It appears that it's the case because prices have broken one, twice, third time. It took 3 trials to break and close below the most recent swing low for this C wave of B. So price breaking this level of 104.04 was an indication that wave C had topped and wave B was formed. And therefore we could start observing price movement to look for 5-wave pattern move down. So if I change the time frame and I go to the daily, this is where it gets interesting, because from the top of wave C of B, prices have moved down for wave 1. They did a correction for wave 2. And within that wave 2, we had 5 wave down for wave 5 brackets of 3. So theoretically, this wave 3 is finished. Now, like I was saying, wave C is unfolding. That means we look for 5 wave down. Now we have 3 waves. The question is, do we have a movement? Is the assumption that this wave C in 5 wave is correct? If yes, then we should see a wave 4 unfold as an ABC upwards, and then followed by another 5 wave down of lower degree to form the wave 5. It appears that wave 4 is unfolding with this recent thrust higher. If this is indeed the bottom of wave 3 circle, then we can take Fibonacci retracement from the top, the bottom of wave 3 up to the top of wave 2 to identify where is this correction potentially gonna end for wave 4. So you see, I take it from there, I move it back here. Let me take the cross here, it's easier. Okay, so wave 4 is more often than not reaching 38.2% retracement, but cannot, in an impulse structure, reach below 50%, or in that case, more than 50%. If prices do break impulsively above, 103.112, then we could consider that this wave 4 is not viable anymore, is invalidated. And instead of having a 5 wave move down, we actually had an A, B, C in 3 waves. And that is not a 3, but this is actually an ABC of a much larger structure that is unfolding, and potentially a triangle with A, B, C, D, E, and from E prices would go down. This is not confirmed yet. We need to see how prices are evolving within that assumption of an A4 of a wave 4 correction. Other than that, confirmation that we are indeed doing a 5 wave pattern move down is if we come and break the low of 100.157. If that's the case, then prices will break this level and indicate that we still need to go down for a 5 wave down towards an expected target of wave C. Actually, I can calculate it. I can display it on the chart. I have it here in orange. Take the top from wave 1, the beginning of this wave A, and take the top of wave B, and then you have the minimum expected target of wave C being equal to wave 1, which is 92.593. So theoretically, we could, if the count is correct, and if we do not break higher than the 50%, and we actually break the low of 100.114, then that means we can expect wave C to end towards this 92.5, 92.6 region. That's it for the update I wanted to share with you. Let me know in the comments if you liked it and what kind of value did that video bring to you. Please do like the video, and also do not forget to subscribe. That means a lot to me. Until then, I wish you an excellent rest of the day. You take care of yourself. Bye-bye.